Welcome to Han Invest TV, where we uncover financial secrets. Today, we explore the bizarre paradox of the modern credit scoring system. Have you ever paid off all your debts perfectly on time, only to watch your credit score mysteriously drop the next day? Millions of financially responsible people face this frustrating reality every single month. They follow every rule, but still get punished by banks. The truth is that the credit scoring system was never designed to reward your responsible behavior. It was built for banking profitability. Today, we will expose the hidden traps designed to lower your FICO score and teach you exactly how to fight back immediately. Let us begin with the first hidden danger destroying your score. This is famously known by experts as the dangerous utilization trap. Most people believe that if they pay their credit card balance in full every month, their credit score will naturally remain high. However, the credit bureaus do not care if you eventually pay it off. They only look at the exact statement closing date. If you spend heavily right before your statement generates, the bank reports a massive balance to the major credit reporting agencies immediately. Even if you pay that entire balance down to zero the very next morning, your reported utilization rate remains dangerously high anyway. This invisible timing error can instantly drop your excellent credit score by 20 or 30 points without any warning from your bank. To fix this utilization trap, you must pay your balance down significantly a few days before the statement closing date actually arrives. Now, let us explore the second massive trap. Many responsible consumers decide to close their old credit cards to simplify their finances. Closing an old, unused credit card feels like a smart and responsible financial decision for anyone trying to stay completely debt-free. But the credit scoring algorithm punishes you severely for doing this. Closing that card immediately wipes out your valuable long credit history. Furthermore, closing a card instantly reduces your total available credit limit. This automatically makes your overall credit utilization ratio spike up drastically. A sudden spike in your utilization ratio sends a huge red flag to lenders, making you appear desperate for borrowed money overnight. Always keep your oldest credit cards open and active. Buy a small coffee once a month and pay it off right away. The third trap is perhaps the most illogical of them all. It happens when you finally pay off a huge installment loan. Imagine celebrating the final payment on your expensive car loan. You expect your credit score to skyrocket as a well-deserved reward. Instead, your FICO score suddenly drops by 20 points. This mind-boggling phenomenon happens because of something called your overall credit mix. Credit bureaus want to see that you can manage multiple different types of debt simultaneously, including both revolving credit and installment loans. When you completely pay off that car loan, that specific type of credit disappears from your active profile, weakening your credit mix. It feels incredibly unfair to be punished for paying off debt, but understanding this algorithm helps you anticipate the temporary score drop. Trap number 4 involves the hidden dangers of becoming an authorized user on another individual's credit card account to build your score. Parents often add their children as authorized users to help them establish credit early. This strategy works beautifully when managed perfectly well. However, if the primary account holder misses a single payment or maxes out their credit limit, your personal credit score crashes too. You inherit their bad financial habits on your credit report. It is a massive risk that requires absolute trust in their finances. If an authorized user account is hurting your score, you can simply call the bank and remove yourself to fix it instantly. Now, let us uncover a massive secret that banks desperately want to hide from you: the truth about your real credit score. You probably check your credit score on free mobile applications every week. You see a number and assume it is perfectly accurate.
Unfortunately, those free applications usually provide a Vantage score. This is a completely different scoring model that most major lenders simply ignore entirely. The shocking reality is that there are actually 19 different versions of the FICO score actively used by various financial institutions today. When you apply for a mortgage, the bank pulls a specific older FICO score version that is much stricter than your free app. Auto lenders use a completely different FICO variation designed specifically to predict if you will default on a car loan this year. Credit card companies use yet another specialized FICO version. This means the score you see is rarely the score the bank sees. Let us look at the tragic story of Thomas to understand how devastating this hidden reality can be for your financial future. Thomas was incredibly responsible. He always paid his bills on time, avoided unnecessary debt, and checked his free credit application every month. His free application proudly displayed a fantastic score of $800. Feeling confident, Thomas finally applied for his dream home mortgage. He walked into the bank expecting the lowest possible interest rate, but the loan officer pulled his actual mortgage-specific FICO score. The bank's strict algorithm showed a score of just 700. Thomas was completely shocked and confused by this massive, unexpected difference. Because his actual mortgage score was significantly lower, the bank approved him but charged a slightly higher interest rate on the loan. That tiny increase in his interest rate seemed harmless at first, but over 30 years, it cost him $31,000. $31,000 vanished from his family's future wealth simply because he didn't understand the difference between credit scoring models. Thomas fell victim to the exact traps we discussed today. He had recently closed an old card and paid off his car. He did everything society told him was financially responsible, yet the banking system penalized him and extracted massive profits from his ignorance. You do not have to end up like Thomas. You can take immediate control of your financial profile starting right now, today. We have developed 5 highly effective, actionable steps you can implement within the next 48 hours to protect your credit score. Step number 1 is to immediately identify your true statement closing dates for every single credit card you currently hold right now. Don't just look at the payment due date. The statement closing date is the exact moment your balance is officially reported. Set a recurring calendar alarm on your phone to pay down your balances 3 days before those specific statement closing dates arrive. By doing this simple trick, your reported utilization will always remain near zero, instantly boosting your score by several points next month. Step number 2 is to strategically request credit limit increases on your existing active accounts without actually spending any of that money. Call your bank and ask for a limit increase. If they approve it without a hard inquiry, your total available credit limit grows. Having a larger overall credit limit automatically decreases your utilization ratio, making you look incredibly responsible to the complex FICO scoring algorithm. Step number 3 is to absolutely refuse to close your oldest credit card accounts, even if you never use them for shopping. Put a small recurring subscription on your oldest card, like a streaming service, and set it to auto-pay every single month. This keeps the account perfectly active, preserves your long credit history, and prevents the bank from closing it due to pure inactivity. Step number 4 involves carefully managing your credit mix. If you're about to pay off a major installment loan very soon, be prepared for a temporary drop in your score. Do not apply for any new credit cards or mortgages during this period. Give your credit profile a few months to naturally recover from the shock of losing that installment loan before seeking new credit. Step number 5 is to stop relying exclusively on free credit applications when preparing for a massive financial decision like a mortgage. Before applying for a home loan, spend a little money to purchase your actual mortgage-specific FICO scores directly from the source. Knowing your exact numbers prevents nasty surprises at the bank and gives you time to fix any errors before the official application. The credit system is fundamentally a game played by massive financial institutions. To win this game, you must understand their hidden rules. They want you to make tiny mistakes. They want your score to drop just enough so they can charge higher interest rates. Every single point on your credit score translates directly to real dollars leaving your pocket and entering the bank's massive corporate vault. By avoiding the utilization trap, you stop them from penalizing your everyday spending habits and keep your score as high as possible. By keeping old accounts open, you build a fortress of solid credit history that proves your long-term reliability to any lender. By understanding how paying off loans affects your credit mix, you avoid making crucial financial moves at the worst possible time imaginable. By being cautious with authorized user accounts, you protect your personal financial reputation from the careless mistakes of your friends or family. And most importantly, by recognizing that multiple FICO scores exist, you empower yourself to navigate the lending landscape with absolute total confidence. Financial literacy is the ultimate weapon against a banking system designed to extract maximum profit from the hard-working, everyday average consumer. Knowledge is power, but applied knowledge is wealth. Take these 5 steps today and secure the financial future your family truly deserves. Don't let another day go by where invisible algorithms dictate your financial freedom. Take charge of your credit profile right now. Share this crucial information with